Hey there, listeners, and welcome to the Dairy Monday Market Watch. This podcast is put on by Cornell Cooperative Extension's North Country Regional Ag Team. I'll be your host. My name is Kelsey O'Shea, and I am the Farm Business Management Specialist here in Northern New York. Each week, we're going to talk with a market specialist about what's happened over the past week, what's coming up ahead, and how these events may impact your business. So be sure to stay tuned and check back with us each Monday. If you're not already, make sure you follow our YouTube channel. We are CCE North Country Regional Ag Team, or follow us on Facebook to see these updates. This week, our market specialist will be Anup Singh.
Thank you. Thank you for having me. So my background is, my name is Anup. I am married into dairy. I met my beautiful wife in Houston, where I was working in the energy business. So was she. And her parents are dairy farmers in Vermont.
Given what's going on and what you foresee, what do you think the next, 6 months will look like? Will we see some leveling out? Will we see some more peaks and valleys? What do you think we're going to see price-wise? Just given everything that's come out with potential reopening plans and that sort of stuff.
Yeah. So on the reopening plan side, the plans aside, right? I mean, the plans are whatever the plans are. And frankly, I don't even I at a very personal level, I've invested very little time to understand the nature of the pandemic itself. So I have no idea about any of that. What I've been studying more so is what happens in the reopened economy. Right. And let's break that down into a few things. Let's take where money gets spent from our business, food business is concerned, right? We'll just restrict it to that, our discussion to that. Yeah. So food at home, food away from home, right? Those are the two broad categories in which we spend money on food.
Absolutely.
Now, what we have seen in the last 50 days is food at home expenditure is up significantly. And the food going through the grocery store, they can't keep food on the shelves long enough. Right? So what that's telling us is that the demand in the food at home category has increased tremendously compared to that in the past, which makes sense because remember, you and I were chatting earlier that of the 21 meals that one would have, 3 meals a day, 7 days a week, on an average, people who were working were eating probably 5-6 meals out. That entire 5-6 meals came home. So that's all, food at home.
Yep.
Yeah. Okay. So that's our food at home. Now, the interesting part is a lot of the food service demand and the excess in the supply chain was driven by, 5 or 7 meals people would have out. So that's a huge part of the economy, right? Because that's just how it is. So the food away from home, there are two broad buckets in there, is dining in and mass recreational. So dining in is restaurants, you go sit inside, or, now the restaurants, we can put McDonald's, Burger King, all of that in that restaurant bucket, and this mass recreational.
Right.
Mass recreational is, sports days, basketball games, football games, soccer games, baseball.
Okay.
Public performances. I mean, that's a part of society, right? I mean, summer you have concerts and like Chicago, probably 4 days a week in the normal summer, there'd be something mass recreation going on.
Yes.
Right?
It makes me sad just thinking about it.
Right. I mean, I don't even watch baseball and football. I talk to people who do, and they feel like, oh, without March Madness, what's the point of existing? And to be perfectly, candid, I had no idea what March Madness was until this year.
Right.
When people said, "Hey, what? You don't know what March Madness is?" I'm like, I'm looking at the market and a lot of plenty madness here.
Yeah. Yes, I have my own version of March Madness.
Right. Anyway, so in the reopening, do we think mass recreation will reopen meaningfully? Right. So, and if the mass recreation opens half or a third or whatever it is, that's that much less demand.
Right.
Right. So we need to understand that segment. Okay. Now we go to food away from home. Food away from home has two types of demand that go to food away from home: leisure demand and business demand.
Okay.
Leisure demand is you and your husband deciding to go on a date night and you go to a restaurant and eat. That's leisure demand,
Right.
right? Or families, going to Disney World. Disney World is a crossover between mass recreation and leisure, right? And you go there and 7 days a week, 7 days you are there, you're eating out every meal. Okay, that's leisure demand. Now, and the business demand is downtown, everybody going to work, going to lunch downstairs, or me traveling. I used to travel a lot. This is the first time in my life in 60 days I haven't gotten on a plane. Probably the longest stretch I've not gotten on a plane in the last 20 years. So when you travel, go to the restaurant and have dinner. I think that business related travel and business related eating out is probably way longer out than leisure is.
Right.
Right. And the
Oh,
reason is,
yeah.
right. And there's a driver for that. And I could be wrong. In fact, I'm probably wrong. Is liability has a big thing to be solved for that. Is if I ask my employee to go get on a plane and go to Boston, something happens to the employee, who's liable? And you
Yep.
could not today go buy pandemic insurance, pandemic liability insurance at a price that you could stay solvent of.
Well, right. You can't buy flood insurance once it's already flooding.
Exactly, precisely.
Yeah.
Right. So the absence of that liability insurance and being able to resolve liability associated with business travel, I think that's the financial reason I feel business travel coming back as a demand to food away from home is way farther out than leisure demand is. So if that is the case, even in food away from home, you have a slightly lower demand, not slightly, materially lower demand than what you've had if everything were to open and everything were fully subscribed.
Right.
Then the third element there is occupancy rate. Is we chatted, I think a few, chats ago, is that, all right, so bar opens, will the bar occupancy rate be 100 or would be 50?
Oh, right. Yep.
Right. So never mind the fact the price of services, just on the occupancy rate, the demand in that food away from home category, probably still suppressed. Now add to that, in order to remain break even, if there are only 50 people going every night, the price of the drinks will have to go 3x.
Yeah.
That will then curtail demand. Now, I think there'll be a surge in demand, right? The day things open, everybody wants to run out and, get a little fresh, taste of something.
Right.
Right. So there's probably a surge, but then the surge subsides very quickly once you've had that one meal you wanted to have, because A, it's too expensive, B, it's, materially inconvenient.
Right.
Right. To go there, get reservations, sit between plexiglass, have somebody wearing a mask and a plastic glove serve you water and wine, and all the above.
Yeah.
So, right. So I think the demand through retail channels. So fascinating data point is, if I haven't discussed this with you, so I've been watching very closely the last 2-3 weeks a lot of the earnings releases of the companies with way more interest than I've done in the past, because earnings releases of companies like McDonald's, Burger King, Papa John's and Domino's gives us a lot of insight as to what they are seeing in the marketplace. Yeah. So
Right.
Mondelez, they have a very small business segment. At least that's what they say, is 20% of their business is food service. Remaining, it's all, stuff they make that goes to the grocery store where you and I will go buy. So in their food service segment, they have the 20% that they sell in food service, they lost 70% of the 20% demand. So that's a huge destruction of demand on the food service market, right?
My gosh, I would say so.
Yeah. Now, one speculation that I had made, in the beginning of all this is, my view was that pizza business was designed for stay-at-home eating. And if any business that outperforms anything else, that should be pizza.
True.
My wife, I must confess, did not follow my advice, and she did not buy Domino's and Papa John stock. And that stock you can't put your hands on today.
Really? It has truly reacted, I mean, as it should.
As
I'm
it
kind
should.
of surprised.
Right.
Wow.
So because my speculation was that, you know, McDonald's and Burger King, yeah, it's drive-throughs and all that, but they have a huge element of sit down and eating, and drive-through is like, who wants to go drive-through if I have to stay at home, right?
Right.
Pizza business was designed to be delivered at home. That's why, lots of my friends who I grew up in India, but lots of my friends who grew up here, that's how they paid for high school and college, is by delivering pizza, right?
Mm-hmm.
So pizza is a delivery-based business. So why will that business should flourish if you can't go out? So one very important, so that's not the exciting thing, that everybody knows this. The part that was exciting to me is Gretchen and I were listening to these earnings calls, and I think Domino's said that they saw a 2 to 3x surge in weekday pizza sales.
Weekday pizza sales.
Weekday
Okay.
pizza sales. Makes sense. People are at home, they're ordering pizza.
Yeah. Instead of just on Saturdays. Right.
Exactly. What they did see is a drop in late night pizza sales.
Oh, yeah, fair enough. All right.
Yeah. So socializing, or you go to the bar, you come home, you hungover, want a pizza, that demand was gone because there was no more going to bars. And there was no more socializing, right? So that made sense. So the weekday more than offset late night pizza sales.
Okay, that was going to be my next question was it enough to offset it? But yes, it was.
It significantly was. Now, what that's then doing is keeping the cheese demand, as far as, so the reason I was listening to all these calls, I'm like, okay, what do they do to the cheese demand? So clearly, I mean, that's what then tells me, okay, so there's a floor on the price. Floor is 120. That makes me feel good. That, cheese price 120 sounds reasonable. Butter price upside 180 sounds good. Butter price downside 130, 120, not so good. So hence, every time you see a 180 price, good to hedge butterfat content in milk, or butterfat or butter. Bottom 120 cheese, which is great it's not great, but at least it tells you it's not going to be $9 or 90 cents, or I hope not.
Right.
So what we see the next 3 to 6 months then is, this sort of a range bound market, which is not bad. So we need to take opportunities of these extremes and do what we need to do at these edge points, if you will. Also, the other thing to me, and I hope there are other people who are putting this in their evaluation, is, when the markets receded initially, the big discussion was, well, the farmers are going to cull their herds because the price is gone. And my discussion with you offline was, but would the herd get culled if the debt doesn't get culled, right? Because the debt still has to get paid. Now imagine if some farmers would have culled in April and the price rallied to $18 today, how bad that would have been.
Right. Well, right. I mean, some still did, of course, and farmers now are still dealing with the percentage reductions from their co-ops. So no, there wasn't a mass culling, you're right, but we're still going to see, in theory, ideally, a supply contraction. There's still one yet more to come, I should say.
Yeah, and the supply contraction, we need to distinguish between collection contraction and supply contraction.
Well, true, you're right. It's just what they're being paid for. You're absolutely right.
Right. So there's a supply, distinguishing between supply and collection. There's a distinction to be made between demand and consumption. So demand is I buy and I store and I sell when I want to, versus
Yes.
I buy and I consume. Right. So I think these prices should bring some of that supply out from storage as well. And if there is some production facility that is not running 100%, these prices should enable and be indicative that that production, because clearly the prices went up so high because nobody had product to sell. And my view is that, well, there's a dichotomy in that argument. If nobody had product to sell, why were we saying there's too much product in the first place? And if there is, the price is saying there's not enough product to sell in the marketplace, so why has the co-op then, reduced the percentage of milk collection?
Right.
right? So because you also see that there was a big industry representation to the government 2 times in the last month of support for the farm. I wonder on what basis will the third representation be made when the price is today $16.75, $18. So those are some interesting things, right? I mean, those are things that need to get factored in. So answering your question is, so as long as there are those forces in place, expect there to be volatility, a very, very, pronounced level of volatility. Now, having said that, you would also say that, well, the problem can happen once, can it happen twice? Well, we just saw the second round. The first time the prices sold down, now the prices got bought up. I would have imagined, like in the crude oil market, it happened once and then it solves the problem for a little while. But clearly, we are still speculating in this market. We, meaning all the participants in the market, are still speculative. Hence, the market goes down, limit up, limit down. 45 days ago, now it's limit up so many days ago. Today's limit down again.
Right.
So as long as risk management occurs at lower levels, the market will continue to, violently move with this volatility. And when you start to see the moves in the market reduce, that's a sign that most people have now done risk management in the marketplace. Because what really producers and consumers need is stable prices.
Okay.
Right? Now, it's a little bit of, it's a flaw when I say that, you could argue the producer always needs very high prices and the consumer always needs very low prices. I would argue that actually what both parties need is stable prices.
Yeah, that's a great point.
Because if the prices are stable, then it puts pressure on our ability as operators to operate way more efficiently than we would operate. And that efficiency is a platform for future growth and development. Because otherwise we're not progressing.
Right.
So what we need is stable price environments that we can get more efficient in it, so that the once in a while when we get the swings, that's the bonus.
Yes.
But the bread and butter is not predicated on speculating. The daily bread and butter should be speculated on our ability to bet on ourselves and our ability to efficiently operate our businesses.
Mm-hmm.
So anyway, so next 3 to 6 months is, I think this market feels to me that there are a few more swings up and down left in this market. I don't think we are done with the swings yet.
That's good to hear. Well, and I think it gives people, I mean, of course it's all speculative. We totally understand that, but just to have a sense of whether or not now is a good time for action, as far as like we had talked about, or as you had said, locking in perhaps some forms of risk management while there is a high.
Yeah.
Or while it may, who knows how long it'll stick around for. My other question to you, Anup, just kind of the last one for today, was again based on these reopening plans overall, and some speculation that of course we won't return to any form of normal until we have a vaccine, is that as far as what we had talked about in our very first episode with that possible disappearance of demand, anywhere between 15 to 30% based on butter, based on bulk products, etc.
Yeah.
Do you see that extending basically that reduction in demand until we have a vaccine? Or is this just going to be our new norm potentially for 5 years? We're going to kind of be missing this restaurant business piece, just like you had just talked about your thoughts with, there won't be work-based travel or work-based leisure eating out because of the liability of it for an incredibly long time.
Yeah. So the sad part about pandemics like these is these kind of pandemics, although not, as I said, I don't know much about pandemics. I do know a few very small things about economies. So you think in terms of distant markets, so Southeast Asia, Africa, Middle East. these markets, population densities are extremely high, so they don't have a lot of land to cultivate. So most of their food source comes from the United States, North America, South America, and Europe. So these three are places where we produce more than what we consume, and then this food is then sent, gets exported to these markets distant. Now, a key part of this pandemic is it restricts mobility of people across borders. Um, so one element, you and I have chatted about this earlier, and I've thought way more about it since you and I have chatted about it, is what does it do to labor mobility and labor availability?
Yes.
Right?
Yep, we did talk about that.
Right. So I think on-farm cost, I would expect the on-farm cost to steadily increase. In fact, I would even argue in certain markets, we should not be surprised if we see corn, soybean, and things like that, next year, um, climb up to very high proportions just because farm labor is not available, not here, but in places where it's produced in a labor-intensive fashion, and that occurs. Now, how does that impact our demand? Is Now, one thing that I've seen is in the last 45 days or so is countries reaching out in international markets for food security, for simple reason is the level of uncertainty that exists. So when markets start reaching for food security, I would say that on a mid to long meaning mid in the sense is 3 months to 6 to 9 month basis, the ingredient level commodities, we should see a good amount of movement at lower prices across borders. So take, for instance, let's just take Mexico. Mexico's currency weakened from, let's say, 18 to 25, nice round numbers. It was 18 in January and it was 25 a little while ago. Now you extend that, and the price of cheese was $1.80, it went to $1.20. But at $1.20, even with a currency of 25, the cost to Mexico in peso was lower than what it was when cheese was, $1.80. So
Right.
it makes these commodities affordable to some of the distant markets, right? And we should see a lot more of that happening. I had done a field trip to Morocco a few years ago, and the reason I'd gone to Morocco on a field trip was the only market that buys US butter in the form that's produced in the US, 80% salted fat butter, is Morocco. Now, I had gone to Morocco to study that for two reasons. One is, why does Morocco buy butter? Because from a human race and all of that standpoint, this is a sour milk market. Butter eating was not in their diet, so why do they buy butter? And the second thing was then is what's the economics of them buying butter? Because the US butter producer, if they don't sell in the futures market, they sell to Morocco. Now, one thing I had learned at that time is Morocco's economics, this is 2016, 2017, their economics, not economics meaning the country's earnings or GDP, but the economics of butter there was that they would buy US butter, the US butter went to $65, $70. Now, of course, that numbers have changed now, but commodities at lower prices should seek out markets that otherwise were unattainable, 6-9 months ago. So I do feel that while demand near shore goes down, demand offshore should offset some of that, although it may not offset the absolute price level that the near shore demand was offsetting.
Okay, so we may see almost a similar volume at some point, but it won't be a volume of product, but not a similar volume of money per se or price point.
Absolutely, because
Okay.
the commodity then has to be cheap to pay for the freight to move to that market.
Right, of course.
Right? And they will not pay the price for higher end, derivatives of the product, like whipped butter, whatever, right? I mean, stuff we
Yeah,
see, right? They will probably pay for
bulk.
80% USDA bulk salted butter.
Right. Which, to be fair, that is the market that we lost. I mean, maybe not exactly, but
Close enough. Close
close
enough.
enough. Right.
Yeah.
Well, that's very interesting. I'm really glad we were able to talk today, Noop, and I look forward to talking with you again very
My,
soon. And until then, I'm sure some more interesting things will happen, and we look forward to hearing your take on it then.
my pleasure. Thank you so much for having me.